Yeah, 2-3 is the same type of stuff. It handles strictly owner's equity accounts. So we're going to deal with drawing, expenses, sales, and remember we have to determine whether the accounts under that owner's equity category help or hurt, and that'll help us determine what their normal balance sides are and whether they increase or decrease. So you take a look at the first one. It says we're on April 10th. It says we received cash from sales. So what's our two accounts? Sales, cash. Okay, sales is our owner's equity account. Would you say sales is a helping account or a hurting account? Helping. So a helping account would increase owner's equity. What side does owner's equity increase? Credit side. So our sales, $600. Cash increasing or decreasing? Increasing. Cash increases on the debit side. That works. On the 11th, it says we sold services on account to Sam Erickson. So what two accounts are we dealing with when we sell services on account? Sales and accounts receivable. All right. Sales and accounts receivable, Sam Erickson. So, sales increasing or decreasing? Increasing. All right, so we are $850. Accounts receivable, asset, liability, or owner's equity? It's an asset, yeah. So are we increasing or decreasing accounts receivable? Do people owe us more or do people owe us less? More. So we're increasing that asset on the debit side for $850. On the 14th, it says we paid cash for rent. So what are my two accounts? Cash. Yeah, if you flip back to 2.2, it'll give you the list of accounts that we have to deal with here. So I would say we need to specify what type of an account or what account it is. So it says rent expense. That's what I would go with. So we'll go rent. Rent expense. All right, are we gaining or losing cash? Losing. Which side do we lose cash on? Credit side. Credit side for $250. Rent expense. All right, there's an owner's equity account. Is an expense a helping or a hurting account to owner's equity? Hurting. So therefore it's everything opposite of our general owner's equity. So that means owner's equity increases on the credit side, expense is opposite, so it's going to increase on the debit side. So we know that we're paying more rent expense, so expenses are always debited. I mean, that's your just rule of thumb. Expenses are always debited. On the 18th, received cash on account from Sam Erickson. What are my two accounts? Cash, accounts receivable, Sam Erickson. Are we gaining cash or losing cash? Gaining. What side do we gain cash on? Huh? Debit, $425. Accounts receivable. Are we gaining or losing the amount of money that people owe us? We're losing, so it's $425 on the credit side. And then the 20th, paid cash to owner for personal use for $300. What are my two accounts? Drawing. Cash. Drawing's an owner's equity account. Is it a helping or a hurting? Hurting. So that means it has a normal debit balance side. That's our increase side. And we're obviously increasing the amount of money that we're taking out. So that's $300 there. Cash. Are we gaining or losing cash? We are losing. We lose cash on the credit side. So I do a double check, make sure I have everything right. I have credit, debit, credit, debit, credit, debit, debit, credit, debit, credit. 600, 600, 850, 850, 250, 250, 425, 425, 300, 300. So everything here looks like I got it right.